Hello traders, this is my midday video. Quick rundown of the markets. We're going into Apple's earnings, and we know that it has been a dog on the markets, dragging them down for this massive correction. It was leading the way to the downside. And here we have the earnings coming out, which I do not think they're going to be overly exciting on the earnings. The only thing that's really going to goose possibly the earnings are the substantial buybacks, which they could be announcing in the overnight session, in my opinion. So just keep that in mind. The power of the buybacks you can't ignore whenever corporations are buying back billions worth of their own shares. That's not going to be a driving force for the uh, um, stock, despite the outlook, forward going outlook. And the big problem that Apple's having, it's a similar situation as Intel. And if it wasn't for the buybacks, I would be short Apple. But U.S. companies, their chips are very expensive relative to China. And I think that's having a major impact on the uh, U.S. companies because of the expense for these chips. It's not only the demand side, it's the relative expense for these chips. And NVIDIA is a prime example. They were getting almost double the price for their chips there during the Bitcoin boom. And now it's coming back down to earth. It's a textbook uh, scenario of a fad top, and that's why it's coming back to earth in spades. And I find it quite interesting. I have to ask myself, Apple coming out with a lower sales guidance ahead of their earnings today, maybe they're trying to mitigate some of the initial shock and awe to their numbers, which are going to be likely bad because of them lowering their sales forecast ahead of earnings. And maybe I don't know if they had that planned or not, but considering what happened to Nvidia yesterday, who didn't do that, and now Amazon or Apple did do that this morning, maybe they saw what happened to Nvidia and they said, "Hey, I got to come out and we need to prime these markets a little bit before our numbers come out." And maybe so just keep that in mind. Some of the news events that happened today and the reasoning behind it. But basically, as long as we hold above the 159 area right here, the 259 area on our SPY, we are inside the 2018 value area, where 80% of the value was bailed out for SPY back in for 2018. So we are in a bullish stance, relative bullish stance going into this number. So yes, I want to be short. In my opinion, there's plenty of reasons to think that Apple's going to lose some steam, even despite the massive sell-off. But like I said, the buybacks plus where SPY is sitting relative to the news coming out, uh, there is still, and we've seen a substantial amount of positive. They've been looking for any reason at all to hold these markets up, but the large the large caps are the ones I'm worried about the most because they're the ones that have the most risk for a market slowdown. It's not really the Russell. It's the fact that if the global markets are slowing down, the ones that require the most amount of business and the highest profit margins are the ones that are going to be the most susceptible, like Intel, like Apple. And Apple has come down considerably, but can it come down more? I don't know. And I just wanted to point that out. Some of the things that I'm seeing right here. Okay, let's see here. Another one is RQs. We've got this downtrend. We're going into Apple's earnings. So we're back testing our downtrend. We are at the weekly market maker low going into Apple's earnings. So the expected move for this week, we are already closing right at the lows of the week going into Apple's earnings. The markets are anticipating negative news. If Apple, for some reason, decides to rally, this is going to be an explosive move tomorrow. So just keep that in mind. We are above our 2018 value area low. So we are building out value in the 2018 value. So that's bullish to markets. And like I said, once we start breaking the value area low for 2018, that's when the markets really are starting to show a bearish tone, uh, which could easily, depending on the earnings that come out tonight. I think McDonald's has a lot more issues, potential downside opportunity than the actual Qs, because they are actually. Uh, you see where McDonald's is right here. We're inside of our 20. Uh, we're inside of our monthly value for December, but the thing is, right here at the December lows on McDonald's. The issue I have with McDonald's, you haven't really had a reset at all versus the China slowdown. And this is gravely concerning to me. Look at this amazing move up in McDonald's. They had this outstanding guidance for this quarter. And here we are coming off of the biggest slowdown in 30 years that came out from December out of China. And that's why they are pumping up the implied volatility in McDonald's. Whereas Apple, you can actually buy the options on Apple cheaper this quarter than what you did last quarter at these price valuations. So just keep that in mind, that I do think there's substantial downside risk setting up here in McDonald's, but yeah, I'm not positive about it. So, and those earnings do come out tomorrow morning. So just something to keep on your watch list. And some things, another thing that I've noticed, we had this big government shutdown from Trump, and the timing of it, he just got absolutely adamant in the whole month of January that he wasn't going to back down. He wasn't going to back down, all this stuff. And people want to think that, he's just, trying to fulfill his promises and stuff like that. Well, there was something that happened that nobody's even talking about in the media. By him shutting the government down, all the economic data from December or so far this month was put on hold. Yes, that's what I'm saying. The government was shut down, so all this economic data that could have been negative for the markets was absent. So basically, whenever Munition, I can't remember his name, I can't pronounce his name right, back before Christmas, sat down with all the bank executives, basically telling them to buy up the equities, and the markets started taking off. Plus the fact we've had an absence of data, you know, because the government's been shut down. This is, in my opinion, a way to support the markets into earnings season, core earnings season, which of course is this week. Of course, the government just opened up. The timing of it all, was it planned? I don't know, but it's something to think in the back of your head that, hey, and we've had situations in the past where government data they couldn't release some government data and stuff. And in the past, typically, once they miss the release, and if it's bad, the markets at that point, whenever it does finally come out, the markets don't care. So I just wanted to point that out. Was there a lot more going on with the whole government shutdown thing than a damn wall? I mean, uh, Trump's a pretty smart cookie, and he's got some smart people working there in Washington that know the markets well. And the absence of data does make a lot of compelling argument, in my opinion, to keep these markets suspended at these high valuations. Okay, real quickly, like here, some of the best movers today, and that's SQ Square. They got a downgrade this morning, and they had a massive price downgrade below the existing price. So this is a multi-day potential downgrade situation scenario for Square, and you could have doubled your almost triple. You could have got in around $1, and it topped out around $3. That gives you some idea. You could have made 200% return on Square this today, and that was one of the best movers of the day, in my opinion. Intraday movers. Okay, and then you have let's see here. Give me 1 second here. And then we have you could have made more than the double, almost one and a half times your money on Nvidia puts if you would have got them at the open this morning. Okay, it also had multiple more downgrades. Then you had your GameStop. It has been a beast. Okay, you could have made one and a half times your money on GameStop today. Every bit of, well, actually almost two times at the highs of today. Okay, and then you finally had Canopy Growth. That's a marijuana stock, and it has been on a tear the past couple of days. Well, they decided to sell it off today, and you could have more than doubled your money on Canopy Growth today on the all on the put side. So there are some big movers going on, despite the fact that the markets are kind of uh, just washing off the news. Okay, and then on the call side, I actually went ahead and put Whirlpool in here. You could have bought the. It has the 126 calls have just been on fire. You could have picked those up for 16 cents at the lows of the open. They're trading for $11.01 right now. Could you imagine spending $1,000 on that and be 11 times your money at this point in the afternoon? That happens a lot with the options, but Whirlpool, without a doubt, is the biggest mover for the day on some of these options. So just keep that in mind. And then if you go to the market internals, new 52-week highs, we've got 43 on the NYSE, 15 on the NASDAQ, and 2 on the AMAX. Not really pretty solid. Pretty much what it's been doing for weeks now. Right in that ballpark at the upper end of the range. So it's a bullish sign on new 52-week highs in the markets. That's an indication of your breadth. And that makes sense with us being in value like we are. You look at your ESs here. We have positive UVOL, DVOL, but we have negative ascending, descending, negative ticks on our SPY. So that's why we are getting this chop situation. We want to see our internals both on the positive side and gaining throughout the day. And this is a textbook chop fest going into major news events in the overnight session. And then we have on our Nasdaq's even worse. We got -10 on our ascending, descending. We got a little bit of accumulation in our volume, but same situation, chop fest for our Nasdaq. And then our Russell, to finish it all off here. Correction, that was our Russell, wasn't it? Yeah, that was our Russell, chop fest. Now our Nasdaq, which has been acting horrible today. Okay, we have money coming out of our Nasdaq today. It's a bearish signal on our Nasdaq. Okay, and I think this lower sales guidance on Apple had a lot to do with it. They don't want to be overly long exposure to our semiconductors going into this. And also we have one other theme which I want to put out there before I finish my video here. I think we have hit saturation in our cloud services segment of the markets, which has been absolutely a driving force, especially Microsoft. And I am thinking, and keep in mind, Microsoft is more valuable than Apple now. And that is another scenario which I think is going to play out this quarter. We are going to see Microsoft come in because of cloud services, and that also impacts Amazon. And there's a lot more competition out there, competition the likes of which they haven't seen. And as you can see, Microsoft today crashed through the uptrend going into the news events. And I do think this is significant. It started yesterday, continuing today. I think this is a significant scenario for Microsoft and the cloud services revenues. And like I said, American services are expensive. And guess who the one of the fastest growers in the cloud services segment is today? Baba, Alibaba. And this is one area, you can see where Baba's come from. They had like 30-35% growth in their cloud services. And of everything in their earnings report that is coming out tomorrow evening, I think it's tomorrow, no, tomorrow morning is Baba. Alibaba could completely outperform on their cloud services growth forecasts because they are gaining a lot of traction in India, not only domestically but India. Whereas Amazon and Microsoft, they potentially are going to lose a lot of that business because of this whole trade um, situation. So those are just the scenarios I want you guys to think about here. But I'd much rather be long Baba going into earnings and short Microsoft and Amazon. So um, just some things I'm putting out there for you guys to think about, and we'll see how they all uh, work out here. But you can see Baba had an earnings beat last quarter, and we know China was horrible. But the biggest thing I'm worried about eyeing is how their cloud services growth is taking off, which I think is really taking off for them, and and just keep that in mind. And that's all I'm going to say for today.